Hi everyone, I'm Ken from CryptoTradingKS. If you're new, welcome, and welcome back, KS family. Let's run the numbers. Bitcoin currently down 1.95% to 37,339. Ethereum down 1.45% to 25.94. From my 30 plus years in financial markets, I explain the smart money mindset to assist you to be more of a financial blessing to yourself and those you love, gaining real wealth in the process. If you would like daily updates on price movements in the crypto market, 7 days a week, 365 days a year, please subscribe to YouTube. Thank you for being a part of our extended global family. I appreciate you very much. If you're going through a life pullback at the moment, please know that our community's love and healing thoughts are with you. You're not alone. There's always hope, and the sun will come out again. This is a special episode focused on war and what it could mean for Bitcoin, and also what it could mean for the stock market. When we look around Twitter and we look around social media, World War III is trending. You could almost say it's like the end of all COVID restrictions and the World War III train is just crashing through. Of course, a lot of this is coming down to Russia's actions with Ukraine. There's some memes out there on social media, but I think it's really realistic, this particular one. World War I fought with machine guns, World War II bigger ones, World War III the media. We need to always remember that the press and the media are about creating fear. You simply don't buy subscriptions if you're very happy. You need to be feared into it. As a community, we say no to fear. To understand what could happen if war breaks out, it's quite useful to look back in history. What we can see here is the Dow Jones Industrial Index. I've shaded the areas where there's been a recession. And what you can see is the start and end of various wars. For example, the start of World War I and the end of World War I. And we can see in World War I, actually a lot of people died. Wars are just tragic losses of life. Looking into these statistics, what do we see? The countries, Russia, France, British Empire, Italy, the US, Japan, Romania, total mobilized troops, killed or died, wounded, prisoners and missing, total casualties, casualties a percent of mobilized. What we actually see when we go down to this particular total line, about 1 in every 2 was either killed or wounded. Just a tragic loss of life, 22 million people. And on the other side, the grand total, 37.5 million. About 6 out of every 10. So you could say basically in World War I, for every 10 people that went out to fight the battle, 4 came home. Just tragic. And all about ideology and resources. What a just absolute tragic loss of life. Statistics that are out there also tell that around $5.5 trillion was spent globally on World War I. What a tragic loss of money. We always need to look into the context of what happened before World War I to understand what the markets did. I'll just zoom in there for you. World War I started on the 28th of July 1914 and ended on the 11th of November 1918. What happened before it was really important to understand. There were 2 recessions and that lasted 1949 days. Many people were out of work, they were looking for a job, and the social infrastructures that we have today just weren't in place in those days. What happened is that we saw an increase in productivity. People were getting hired to make bombs and tanks and ships. Of course, the stock market went up, and this had a dramatic increase. So what we can ask the question, is it the same now? Have we come through nearly 2,000 days of recession? Of course the answer is no, we haven't. COVID has been a really problematic situation globally, but we've seen the markets rally. What we can see is the markets were just heading downwards. They had a bit of a fake out and then they pushed upwards, and we can see we broke that particular resistance line, went to the next one, got above it and rallied strong. You can also see that the market held trend until approximately the 3rd of May in 1920. What we can conclude from this, World War I, we saw a decrease in the month leading up to it, and then the markets rallied around 131%. And the CTKS trend lines were holding, and it indicated when the trend was absolutely breaking as well on the other side of the war. Even though the overall market was quite positive, you can see a lot of variability from the start of the war up to the first pullback. It went up around 92%, then down about 13, up about 27, down about 40, up 35, down about 11, up 50, nearly 51%, and then down nearly 47%. As an investor, this would have been a really tough roller coaster, but as a trader, it would present many opportunities. After World War I, there was another recession, followed by the Roaring '20s, and it went parabolic. Think of the year 2000. Then we had the Great Depression, and look at that. Investors holding on through this period lost the vast majority of their wealth, but traders, not so much. Let's just zoom in here and look at this Great Depression that occurred over 1,000 days. Here we can see the Great Depression, and a lot of investors would look at this and say, oh my goodness, just blood in the streets. There's no opportunity to do anything in a Great Depression. I want to show you something, how I look at it as a professional trader. I see it very differently. Traders can make money in all conditions. One of the hardest conditions is when a market changes perspective from bull to bear, for example, or bear to bull. But the concept is, if you understand the dynamics of how markets work, you know price is always moving in a wave. One of the most valuable things that you'll ever learn is where to buy. A lot of people think that where to sell is the key. It's actually where to buy. What we see here from the top of this, the Dow Jones Industrial Average came down 50%, then it rallied over 50%, came down 30%, rallied 20%, came down nearly 40, rallied nearly 30, came down nearly 40, rallied nearly 31, came down 45, rallied 40, came down 41, rallied nearly 30, came down nearly 55, and then rallied over 100, came down nearly 39, and then rallied 122%. There are always opportunities in the market, but you have to buy correctly. The Great Depression was the most severe economic depression around the world. If you search for images on Great Depression, you'll see so many. 4 children for sale, inquire within. What a horrible thing. Wanted jobs, people lining up at soup kitchens, and people begging. It was just a horrible time. But yet, if we actually dig into the market, there were many opportunities. Of course, you needed to buy correctly, but if you could have made money in the greatest depression the world has ever seen, of course we can make money in any other one. Many people have an investor ideology. I would suggest, just as ideologies start wars, it's good to get rid of ideologies. For example, you're an investor and a trader, because every investor becomes a trader anytime they buy or sell. Knowing how to do it is a really good thing. Traders also have a very specific mindset, one of probabilistic fearlessness. When we look at the Great Depression, it looks like an absolute and utter nightmare, but when you actually drill in, if you could buy correctly, you would do really well. It's important to not buy in to what the mass media classifies different things as. There are always opportunities in this world, and fighting fear is amongst the most important thing that you can do in your entire life. World War II started on the 1st of September 1939, this particular date, and finished on the 2nd of September 1945, this particular date. Depending on how it's actually calculated, upwards of 60 million people died in World War II. Knowing what led up economically to the Second World War is pretty important. We saw a bounce from the Great Depression upwards, and then a retracement, and then another bounce up. So often, many people will say, the statistics say that war, everything will be fine. The indices will rally. It depends what happened before. And you can see with World War I, we had a very different economic system than with the start of World War II. Let's go a little bit more deeply into what was happening before the start of the Second World War. What we saw here was a trend line being crossed, being retested and failing, leading to a very massive breakdown in price. A rally, a breakdown, a rally, a breakdown, and a larger repair rally. Analyzing the price action, we can see that the markets came down nearly 30%, then had a rally around 26%, down 17%, up 14%, down nearly 30%, up nearly 58%, down nearly 12%, up nearly, well, just a little over 65%. It's always the question. Profitability gets locked in when you buy. If you buy correctly, it doesn't matter what economic situation you're in, you'll do well. I think a critical thing to note here, this is a monthly basis. We saw 1, 2, 3 months where the price couldn't actually traverse this resistance, and then it broke down. After the Second World War, the Cold War started on the 12th of March 1947, and it went all the way up to the 3rd of December 1989. That was a particularly bad period in time. We almost had nuclear war break out during that period. You can see that the Cold War started basically after the end of the Second World War. We had a bit of a downturn in economic activity. The Cold War kicked in. Let's just zoom in there. When the Cold War started, the markets actually did a retracement and went pretty much flat and then turned down as we got yet another recession. You can see recessions, black swans, they're always on the horizon. And then coming out of that recession, a massive boom, and then the start of another war, the Vietnam War, which occurred on the 1st of November 1955. The market stalled a bit. Let's zoom in there. We can see for a couple of months it basically went flat. Went up a bit, went down a bit, went down a bit, another recession. One thing that we always notice, when we get these recessions, they're followed by booms. From a trading perspective, we can see the start of the Vietnam War. The market came up about 8.5, then down about 6.5, up 14, down about 12, up about 13, down about 12, up about 10, down about 10, up 15, down 20. That was the first part of a recession, but when it bottomed out, it actually went up 65.38%. And then heading in to another recession, down about 18%. You can see when recessions bottom out, that's absolutely the time to be in. We can then see a rally of 31%, a decline of 29%. As all investors become traders, anytime they buy or sell, having a trading mindset is a really important thing in order to lock in your profits. Of course, you need the knowledge of how to trade, but when you get this and you can have that emotional mastery that goes with that knowledge, you'll be more of a financial blessing to yourself and those you love. We can see that the Cold War lasted a really, really long time, as did the Vietnamese War, Vietnam. Contrary to that, the Gulf War lasted just a blip on the radar. The Gulf War happened when Iraq invaded or annexed Kuwait. And that war went from the 2nd of August 1990, this point in time, to the 28th of Feb 1991. It's really interesting to note that the market came down during that period, and that also corresponded to a recession. A lot of people ask, what's annexation? What's that? It's maybe the easiest way to think about it is like a cartoon. For example, Iraq wanted Kuwait's land, so it annexed it. It built its fence out. So where is that fence, and where is Iraq? Iraq is down here. You can see Kuwait. Ukraine is up here. We can see the Donbass region here. If we zoom in a bit, we can see Iraq's territorial borders. I'll just bring up Kuwait. We can see Kuwait here. And of course, Kuwait has a greater degree of access to water and therefore shipping. It's also interesting to note that Iraq had 8.4% of the globe's oil reserves. Kuwait had 5.9%. From a resource perspective, it makes sense why Iraq wanted Kuwait. With this in mind, let's go back to Ukraine. Looking into Ukraine's resources, we can see there's a lot of oil in this particular region. And we can see there's a lot of oil reserves running close to Russia's border as well. If we look at the conflict map of Ukraine versus Russia at the moment, we can see there's not much conflict in this upper quadrant. And what do we notice about this upper quadrant? Not many resources. When we actually look at Ukraine, we've got several disputed areas here, but what's really interesting was when it comes to ethnic groups, about 80% of the people inside Ukraine define themselves as Ukrainians. We're hearing a lot of different reports, depending on what news service that you listen to, that the majority of Ukrainians are actually Russian. That would tend to be defeated by this statistic. Returning to what happened with the Gulf War, we can see the market had reached a point where it couldn't hold on to its gains. It sold down, still couldn't hold on to this area of support, and sold down more. But we didn't really see very climactic sell downs. 6% up 4%, down 9% up 4%, down nearly 12, up a little over 8, down 11, up 8, down about 8.6, up about 8.2, down around 5.38, up about 5. The Gulf War started with Iraq invading Kuwait, and then it pulled in the US, the UK, Saudi Arabia, Egypt, and France, and then created a coalition of many other countries. The critical question on our minds, what could happen with this Russia-Ukraine war? And if it escalates into a world war, what could that look like? We've seen the world wars. For example, World War I was up and down. Many opportunities. We even saw in the Great Depression, there were many opportunities to trade there. We can see in World War II, it initially went down but went up, and there were a lot of opportunities in there as well. The Cold War, opportunities. Vietnam War, opportunities. Gulf War, wobbled around a bit, but always opportunity. And we can see when we zoom out, it's really good upward progression here, but we do need to manage our downside risk that occurs. Let's start to put things into some kind of perspective. We have Bitcoin here in the gold line, digital gold, and we can see the GFC, the global financial crisis, playing out from 2008. We can see the COVID-19 global shakeout here, and we can see also that we've lost a level of support. We've been hitting resistance, and we've not been able to crunch through it at the moment. There are still several more support levels, one at 31,688, another one at 28,890, and yet another one down lower, 25,856. We can actually come along this support line and still not break the overall structure of the upward move of the market. If we look back to the global financial crisis, that was about a 55% reduction in price. We saw C19 and the US liquidity crisis down 38.4%, but there's something really important to note here. We had a very long tail wick in that process, came down below and then shot straight back up, making the reduction about 28.21%. We'll still keep with 38.4, but I'm just raising that point that we could get a long tail below this line if we were to see something like C19 sell off happen again, and that happened really quickly in under a month. What are we actually seeing here now? We're seeing a very subdued sell-off. I'll just zoom into this particular region. You can see from the Dow Jones Industrial Average, because crypto just doesn't go far back enough, or back far enough, we can see basically here that we're getting a sell-off, but that sell-off has technical support at the 31,688 mark. It also has support at the 28,890 mark, and we also have further support down here. We could even bring that down a little to 25,646. If we get some form of capitulation like what we saw in the US liquidity crisis, we could get a long tail rejection coming down even lower, but I think that would be very shortly lived. I believe one of the most important questions you could ask is a recent one. If you were in the market when C19 hit, would you actually buy C19 again if it happened again? This is a really important question. For example, when C19 happened, the whole world shut down. Prices in the Dow Jones Industrial Average came down 38.4%, but they continued to rally up above 92%. We can even take it to its highest point here. That's 102.88%. The question is, if you could go back in time and buy this sell-off, would you do so? It's a really important question for you to examine. Please let me know what you would do in the comments. All professional traders and investors have rules. Rule 570, psychology sets profitability. When people enter the crypto market or any financial market, they go through 4 stages, 4 zones to become consistently profitable and attain meaning in life. Zone 1 and Zone 2 are the certainty zones. That's where people lose money. They're not quite sure what they're doing. They don't have the knowledge, so they tend to buy on green and sell on red. They tend to go all in or all out. They get addicted to the news or indicators. Absolutely, they are addicted to certainty. They must know. Unfortunately, you can never know. You can only trade with probabilities, and you can only invest with probabilities as well. Zone 3 is the patience and rule zone. That's where we buy on the red and we sell on the green. And that's very different from what happens in Zone 1 and Zone 2. This is the zone where we make money. But a lot of people know there's a big difference between making money and keeping money. Zone 4 is all about learning the rules of wealth, not the rules of riches. Riches come and go, but wealth can be maintained from an intergenerational level. One thing we do as crypto technical analysts, we have a 10-5-10 fund. The concept is when we buy on red, we actually know that the volatility is working in our direction. We could say that something could start at $10. If it goes down to $5, that is a 50% loss. But just returning to $10 from 5 to 10 is 100% gain. That's why we don't fear black swans. We don't fear the red. We actually get excited about it. And how could you get excited about a red day? Because excitement is a delayed fill. That's rule 307. We also have other rules that we can always buy at a lower price. A delayed fill means that you've actually set buy orders in the market, sometimes significantly below price. And it is actually really exciting to see those buy orders that are sitting there sunbaking, waiting for price to come to them to be actually actioned. We have a very patient and rules-based perspective on how we put money into the market. We're very specific with what we do, and as market conditions change, we're changing with them. traders are actually trained to fight fear, to look at fear and find the advantage inside fear. This is very, very different from Zone 1 and Zone 2. Zone 3 is a fear mastery zone. And of course, that spills out into people's lives as well. They're not as fearful. They don't have as much anxiety, if any, about things. They know how to do trading in life, how to actually master circumstances around them as well. That's why I say life's internal battle is the real battle. This is from my great-great-great-grandfather, Clarkson Stanfield, when he painted the Battle of Trafalgar. What could actually happen to Bitcoin's price momentum? We've got some understanding that we don't feel this retracement if we get one. And remember, we still have support inside the market. We still have an uptrend. The bullish structure of the market itself is absolutely intact. It hasn't broken. There's so many influences with a retail mindset. That retail mindset sees all these wobbles as game over. If they get a red bar, they say it's the end of the world. Actually, that's what we look for. We also know that World War III will be televised by the media, and the media always wants to send everybody into a frenzy, a fear-based frenzy. That means that many Zone 1 and Zone 2 people will actually sell. The more fear is in the market, the more anxiety-ridden people become. They fear this price will just go to zero. It's never the case. Price is always moving in a wave. And you've seen that with the greatest depression the world ever saw. There were many money-making opportunities during the Great Depression, but a lot of people just shut down and said, well, the news, the media told me it's the Great Depression. I need to get depressed. And I know my parents were born during that period. I know how it affected their psychology. I actually used to joke with my dad. I said, Dad, you were born in the Depression and you've been depressed ever since. I guess that's why I turned to mathematics, because maths doesn't lie. You can look at the up and downs. We know that there were a lot of opportunities inside World War I. Inside World War II, there were opportunities. Inside the Great Depression, there were opportunities. Inside the Vietnam War, there were opportunities. Inside the Cold War, there were opportunities. There are opportunities everywhere. Sometimes the best thing we can do is to just zoom out. I just want to let the masterclass students know that you'll get this in LV14, this live chart. If we get a climactic black swan that basically tanks the crypto market, what could that look like? First of all, it will be the single best buying opportunity ever. These crypto crashes are fantastic. What you can do is you can get in at successively lower and lower prices. The most important thing is always to understand what you're investing in. If you're buying something like Bitcoin, you know it's the ownership layer of Web 3.0. It will be around for decades to come and will just continue to increase in value. It doesn't matter what the mass market says. A lot of them just don't understand what it means. Unfortunately, the latest black swan, Russia, has killed the KS model's prediction. You could say that the first casualty of the Russia war is the KS model. Oh, that's so sad. I mentioned that yesterday because I feel it's quite important to just say how things are. Things could have moved around. We saw a lot of potential momentum inside the market, and it's actually still there, but we just need to be practical with things. What we can see, I'll give you two levels on a worst case scenario. One is 26,546. That is this particular red area. That's the worst case scenario, level 1. The second worst case scenario is 19,666. These both represent incredibly good value buy levels. We can see that this red line that I developed mathematically has held price exceptionally well through bull market and bear market. And we could see with the US liquidity crisis and COVID, if you bought at this particular red line, you were doing so well. And that's what we understand about percentages. It goes down 50%, but it comes back up 100 when it just restores the previous value. That is what the 10-5-10 fund is all about. Unfortunately, institutions and smart money never tells you these rules. They tell you the opposite. Why? Because they want to buy what you're selling. When you understand 10-5-10, the whole world opens up. You can actually focus on buying really, really well, but also just going with price momentum as it exists in the market. A very powerful smart money mindset is to make in advance probabilistic choices, know what you will do and stick to it if the price goes down, goes up or goes sideways. And don't worry about being right or being wrong. Being right and wrong is for zone 1 and zone 2 people. You trade on probability. If the probabilities change, you just change with them. We know that there's a lot of support for the market at current levels. A lot of people think that gravity applies to the stock market. It does not apply. The reasoning and logic behind that is that we always have new inventions, new innovations, new ways to do things more effectively. And those actually drive economic growth. That is why price continues to go up. There are so many new inventions. Inventions are just exploding across the globe. A very quick question. If you could have gone back to the start of the internet, would you have invested in internet companies and just held through all of these ups and downs? If the answer is yes, that is what crypto represents. Crypto is the ownership layer of Web 3.0. And that is the next level of the internet of money. It will literally change everything. If you would like to become a crypto technical analyst and scientifically track investor attention, you can learn how to draw support and resistance lines effectively, how to interpret external trends such as stock market and world events, how to look inside the crypto market because opportunities always reset daily, how to pick up the real wealth, positive life trend mentality, which gets you into zone 4, and then of course how to buy and sell effectively. There's always volatility in financial markets, and we make that volatility our best friend. Instead of being an enemy that keeps you awake at night, it's a friend that looks after you. And when your buy orders at ridiculously low levels fill, there's a very big sense of excitement. What do you feel will happen with the Russia and Ukraine situation, and how do you think it might impact the markets? I'd love to hear your thoughts. I hope you found the content useful. Please consider sharing and liking this video if you think it will help others. Thank you very much to our moderators for keeping our community safe from scammers, and the CTKS ambassadors for mentoring masterclass students and providing that 80% off discount coupon. And of course, a very big thank you to you for watching. Thank you for being part of the global KS family, and please say hi and let me know if you have any questions. If you would like daily updates on price movements in the crypto market 7 days a week, 365 days a year, please subscribe to YouTube. I've left helpful links in the description of this video, such as the link to the CryptoTradingKS Masterclass. Please seek out an ambassador to get 80% off. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there, my friends. Take care and see you next time. Bye for now.